Welcome to Governance Dialogues. It's a pleasure to have you join back this program. My name is Elisa Cole, and I'm the Managing Director of Governance Center, which is an advisory firm and a think tank working on identifying and addressing challenges in economic and corporate governance worldwide, and in particular in emerging markets. And for those of you who are joining this program for the second time or perhaps the third time, welcome back. For those of you who are new to the program, the objective of Governance Dialogues is really to dissect and delve further in the world of governance and conversations with the world's thought leaders, be they board members, regulators, financial market participants, and others that have an interesting view to share on the topic. And on this program, we've naturally hosted a number of regulators, capital market regulators, in particular, as they are key players in setting the rules of the game in the world of corporate governance. And with that, we've hosted the chairwoman of the Portuguese Securities Regulator, but also the CEO of the Emirati Securities Regulator, the DFSA. And I'd like to today continue this tradition and having conversations which I think are enlightening to our audience, be they specialists or generalists, on the future of governance in discussions with securities regulators. And in today's program, I've invited Marcelo Barbosa, who's joining us from Brazil, to discuss developments that we're seeing currently in Brazil. Marcelo, welcome to this episode.
Thank you very much for having me here, Alisa. I appreciate the invitation.
Thank you for joining us. And I think that it's an interesting time to discuss your country and developments, not only in relationship to some current corporate developments on Petrobras and others, but also more generally because Brazil is in some ways a very interesting story from an ESG perspective, and it's of serious interest to a number of large institutional investors who are looking to protect some of the sort of especially natural assets, and we've heard some cases like the P&G. Involvement with P&G by institutional investors when the company, for example, announced that it will fail to honor its 2020 zero deforestation goals, in particular in your country, and which is host to so much of the world's natural forests and other natural resources. So I think it's an interesting time to talk about Brazil, as I said, for a number of reasons. So it's a pleasure to have you here. And for the benefit of our audience who might not know of your accomplishments and your work in the country, I would like to maybe say a few words about your background. Obviously, your current role is to lead. You're the president of the Securities and Exchange Commission of Brazil, but you've also in the past had a number of other important roles in the country, of course, academic, but also as a member of the advisory board of the Columbia Global Centers for Latin America, and also of the Acquisitions and Mergers Committee and Fiscal Council of the Lehman Foundation. Also, and I think this is an important point, you are actively involved in the work of IOSCO, which is perhaps an interesting place for us to start our conversation today, insofar as you're active in their work, and IOSCO is naturally an important standard setter in the world of corporate governance. So I thought perhaps to start our talk by asking you what your views are on the current work of IOSCO. What are the current priorities that are preoccupying sort of the minds of securities regulators today in light of the current sanitary crisis, but also in terms of more general corporate governance trends that there is a consensus amongst regulators that they need to address?
Okay. Well, there's a number of important topics and areas of concern for each of the regulators, which basically translate into IOSCO's concerns in a larger scale, and the fact that we can have an open discussion at the board level with strong support from the work done by the Secretariat and by each of the policy committees and each of the participating regulators is very good, and it's something that reverts positively to all jurisdictions. So obviously, since early last year, the pandemic has been an issue of an area of great concern, and the discussions that we had in terms of all the potential consequences, they were very helpful for all of us when discussing volatility, liquidity measures, liquidity aid measures, and topics like that. So that has been very a very important support that each of the jurisdictions, each of the regulators received from the IOSCO board and the market in general, due to the fact that we were reinforcing the message of continuing normal, orderly operations of the markets. The worst possible consequence would be interruption, trading interruption. So there was a very firm message by the board that I'm sure that resonated well through all the markets, and the response was very positive. In terms of ESG, and I'll bridge to your standard setting question using ESG as an example. ESG is clearly an agenda that's not simply a trend. It isn't. It shouldn't be seen as a trend because it has permeated the policies of all the large scale investors. In terms of value, it's something that has been deeply reflected in the new generations of investors, of decision makers, the future decision makers. So to consider ESG as simply a trend, I think it is a serious underestimation. I would say that accepting these topics as something serious will be a key factor for maintaining the markets as competitive towards the large and all the, actually, to be honest, by all types of investors. So and in order to do a serious work in the ESG agenda, each market can profit a lot from a reliable set of standards that can be provided by entities worldwide, and IOSCO is involved in that, not as itself as a standard setter, but as a supporter of important initiatives such as the IFRS initiative. We liaise with the IFRS on a regular basis. We have a monitoring group that does part of this following up work. I'm actually a member of that group, and we are collaborating and establishing a very important dialogue with them so that we can reflect that in our standards.
You mentioned that because we actually did discuss that in a previous episode. I hosted Robert Eccles, who's also very active in this sustainability from accounting perspective, sustainability debate, and the need, as you mentioned, to set standards that allow for some comparability, which has been a problem in some markets, notably the US, with differences in accounting standards. And it seems that we're getting a little bit closer to seeing the light at the end of the tunnel on that one. But I wanted to also perhaps get your views as to some of the emergency measures that have been adopted this year, with transition of boards to virtual and shareholder assemblies, also to virtual settings, and other sort of amendments that regulators have made on a sort of temporary basis to allow for, let's say, some sort of normality in the world of corporations. And I wonder if your feeling is that these measures, were temporary and will be, let's say, cancelled or not renewed once the situation subsides, or if we're really going to see an echo of this crisis that will in some way stay in the world of regulation, securities regulation, and in particular governance regulation going forward, independent of the health scare situation.
That's a very good point, Alisa, that you make. I have two comments on that. First one is that there's a lot of literature supporting the idea that capital markets regulation and corporate law and regulation, they are strongly driven by crisis. You see that the most important statutory and regulatory initiatives, the broader ones, you can trace them back to a crisis that motivated them. But this is not the case here. This is not the case here because the crisis that obviously impacted the markets is not driven by any sort of loophole, scandal, fraud, anything like that, that pointed back to a market failure or to a regulatory or statutory failure. It's obviously a health crisis that has deep impacts in the markets. It has impacts in any aspects of our lives, of course. But as it will probably happen with anything else in life, in society, in culture in general, some of the changes are here to stay, some are not. I'll give you a few examples. Well, you mentioned the virtual meetings. When at least here in Brazil, it's exactly a year ago that VM started working remotely, exactly a year ago. And that would be 2 weeks before the deadline for companies to publish their financials, which need to happen 30 days before the end of the deadline for companies holding annual meetings in Brazil. So companies, their auditors, they were very much concerned, and with obviously with good reason, because they were afraid they could not complete that work, publish the financials, and hold the shareholders meetings. And the problem in our case was that all the procedural aspects of the shareholders meetings, they are provided for in law, not in regulation. Wow. So we at the CVM interacted with the federal government. So they had the initiative of issuing what we call here a medida provisória, which is some sort of a provisional decree that can be later converted into a statute, to basically to allow for a later realization of shareholders meetings, so they could happen later in the year, not within April 30th. And they allowed us, the same law allowed us, the CVM, to create the procedural rules for virtual shareholders meetings. In parallel, we were working on the new regulation that allowed for shareholders meetings to be convened with full or partial use of technology to allow for the remote shareholders meetings. And by the way, we did that also to meetings of investors of funds and holders of debt securities. And that came to stay. That's a change for good. We did not have any relevant problem with the virtual shareholders meetings that happened last year. We expect an even higher percentage of fully virtual shareholders meetings this year. So that's a change for good. Some measures that were basically more, they were crafted just for last year. I can give you a few examples. Although it's not in our regulatory perimeter to act in terms of facilitating liquidity, that's not in our mandate. We did give some more flexibility in some cases for companies to make subsequent issues that are carried out by exempted offerings. So we have a minimum 4-month wait period between two issues from the same issuer, and we basically waived that for last year. Yes.
It's actually really interesting, because you're mentioning, and it sort of gives a very, I think, fascinating insight into the world of regulation, and how regulators in a way think of these different parameters, whether, you know, some temporary and some kind of more permanent. And it seems to me that you were basically suggesting that that it may be the case that in Brazil, and perhaps in other markets as well, this sort of transition to the virtual might be an element of what might stay beyond this crisis. And I think it's interesting for a number of reasons. First, because, you know, there's also differences in different markets as to what was allowed to begin with in terms of virtual. Some countries have always allowed an element of virtual assemblies or virtual shareholder meeting, board meetings. Others have not. So it's interesting how different regulators have adapted to that. And what's also interesting is, I think, the element of technological change. For example, I watched an interview with the CEO of a company called Magic Leap Technologies, which does not only virtual but virtual reality type interactions, and they were, you know, alluding to the fact that it might be also one of the new frontiers, one of the frontiers of the application of these virtual reality technologies might be in the corporate sphere, including in the corporate boardroom. So it would be, I think, really interesting to watch that space going forward. But if I may, I'd just like to ask you a little bit more questions around your own market and some success stories that I think many regulators have over the years, and many stock exchanges have looked up to. And there, obviously, the Bovespa example and the Novo Mercado, example in the Bovespa obviously jumps to mind, where I know I've worked with a number of stock exchanges and regulators who looked at that example and said, you know, well, that's interesting that they've done that. Let us see how we can also create or craft segments with specific corporate governance standards that might attract institutional investor interest. And I think, in my personal judgment, it hasn't really been replicated with the same success as it was originally crafted in your country. So I wonder if you could say a few words about that transferability of these ideas, and why that example sort of, well, you know, really flourished in your own case.
Well, the Novo Mercado initiative came a few years after the Real plan that basically stabilized the economy and hit the hit inflation rates very hard. So it was a subsequent step to reinforce capital markets, basically by creating a special segment for companies willing to adhere to higher standards of transparency and governance. It was, back then, it was an initiative driven by the stock exchange Bovespa, now called B3, and with obviously with direct involvement of the CVM back then, and by the whole industry, to be honest. So if you ask me what is key for other markets to replicate, I would say it's collaboration by regulators, self-regulators, market agents. And just so you know, it did not simply click when the Novo Mercado rules were created. It took a while until we had even a handful of companies listed at the higher level, because there's Novo Mercado levels 1 and 2 below, and it really took a while, and only in, I would say, 2006 and 2007, when we had our first relevant wave of IPOs in Brazil, that we saw newcomers to the market making their first offers already as Novo Mercado type companies. So it takes conciliation, it takes collaboration by all the market, from public agents to investors, to fund managers, and companies, and obviously the stock exchange that conducts the listing. It's I can understand why it's not so easy to be replicated.
Exactly. And I wonder also, to be honest, observing the recent market, in particular developments in the stock exchange industry, I wonder to what extent stock exchanges today, given their reformed sort of ownership model, the fact that many, since the demutualization of, well, the first one was Swedish Stock Exchange in the 80s, but many of them have gone private, self-listed, and whether exchanges in today's world have the incentives to sort of go higher in a way in the world of corporate governance, or as far as corporate governance rules are concerned. What we're seeing today, arguably of concern also to many investors, is stock exchanges actually trying to say, listen, we'd like to actually perhaps water down some of our standards in order to facilitate fresh listings for perhaps family companies or SMEs or tech companies that are not willing to go public with one share, one vote type kind of legal parameters. And we see that in the US, we see that in many emerging markets where I work. So it's also, I think, raises questions as to whether that line of thinking that was let's say, adopted when you had originally arrived at that idea or conceived that idea would be applicable today, indeed,
It's a good question, and it's a constant, and maybe I would dare say a permanent tension between facilitating, flexibilizing the rules so you can attract founders that want to hold a smaller piece of shares and still retain full control, maybe having super voting shares, and on the other hand, investors that will be hesitant to join those initiatives, because then there will be less control over those companies. I think it's a permanent debate, and there's no one size fits all solution, really. I really think so, because when you look at a market such as the US market, where you have those types of super voting shares, as you can call them, they do have that, but number one, there are discussions on establishing a sunset provision that would give some limit to that, and number two, they have the comfort of having a quicker judiciary response and specialized judiciary response in Delaware than maybe the vast majority of the jurisdictions. So there's the sword over the head of controlling shareholders, of minority controlling shareholders, if you can say that. Yeah. And that's the case. It gives them comfort. But if you take the example of other markets, where you can find maybe a more lenient set of institutions, then maybe it's too much flexibilization. It's not really my position. I'm just saying what you find in literature elsewhere.
It's interesting because when I was at, well, as you know, I was at the OECD for many years, and we also, and this conversation is, as far as I know, ongoing in the OECD. It's about this idea of flexibility, what they call in technical speak, and what you would probably call as well, flexibility and proportionality. How flexible should regulators be, and how proportionate governance should be to the ownership structure of the company? And the responses are indeed very different. Some think that if you have a controlled company, you should have more stringent corporate governance requirements. Others are going the other way and saying, well, if you're a controlled company, let's leave some space for the founding shareholders through dual voting shares or multiple voting shares in order to incite them to go to markets. And I think it's a really interesting debate, and it's actually something that we discussed with the chairwoman of the Portuguese Securities Commission, because they are currently thinking of introducing different types of shares, loyalty shares, and others. So it's something that that I think we'll continue seeing in the debate in the regulatory community. But let me, if I may, just in the interest of time, I know yours is precious, turn and ask a few more questions around your own sort of market, where we've seen let's say different performance in terms of IPOs, where in some years around, I think it was early 2000, very strong performance, also on the back of Novo Mercado initiatives and the likes, and then a decline. And I think more recently, if I have my numbers right, there has been sort of an active pipeline of IPO and also realized transactions. And I wonder if you have thoughts as to how you explain that, especially in this current rather strange environment where one wouldn't expect that. And indeed, there are very few markets apart from China where there has been a flurry of IPOs coming to fruition.
Well, a key factor for the development of the market here, especially within local investors, is the consistent decrease of the interest rates. And just individual investors, the number of individual investors here has raised in 3.5 years, from around 600,000 to 3.3 million, and that's just individual investors. It's a very steep increase. So that's one, and two is the adoption of the technological platforms for distribution here. That's been very widespread throughout the country. So that facilitated the offerings and was maybe one of the cases for them. And if you compare the investor profile of the IPOs we had between 2006 and 2007, where we had around 70% of foreign capital and 30% of domestic, this time it's almost the opposite. So we had a strong adherence by domestic investors here, and the profile of the companies is very interesting now. It's much more diversified. We see a lot of retail companies, of companies you would never think about, that are already applying for registration with the commission and subsequent IPOs. It's a very interesting moment for capital markets here.
Yeah, that's and indeed, as you say, it goes in a way. It's a trend that doesn't necessarily flow in the direction of I think IPO markets worldwide. And I think perhaps one of the last questions I would like to ask you today, again, since we sort of committed to having these interviews over half an hour period, is to ask you sort of around IPOs. And if we look at financial media and trends in these markets worldwide, we basically hear a lot of criticism that IPOs are basically being used for founding shareholders as a sort of a quick exit mechanism, and not really as a mechanism of growth of high growth companies. And OECD in a lot of its research points out that indeed the number of sort of high growth companies, tech companies or others coming to the market is sort of going down. The number of small company IPOs is going down worldwide. And I wonder, to what extent is that reality fitting to your context? Or again, is Brazil sort of standing out in that respect as well?
I think we still had a number of companies that are relatively young that are looking for IPOs to finance growth. So and not necessarily companies that have had a first round or second round of financing with venture capital or private equity. Some companies are still founder-owned, family-owned, and the owners, they still want to grow a little more. Obviously, there's frequently a percentage of the offering that's secondary, not necessarily all primary offering, but you see a good number of companies still here that have discovered capital markets, and they still have appetite for growth. But as a concept, I don't think it's necessarily a bad thing that that founders want to exit. I mean, if this is transparent in the IPO documents, it will reflect on the numbers, on the return of the IPO, and obviously on the performance of the shares from then on. So it's I understand the criticism, but I have to say I'm a little agnostic about that. It can go both ways. I mean, a company that becomes public and the founder can stay at the company very much committed. Maybe it's not a company that's ready for capital markets and for the future obligations and so on. Maybe a founder that leaves is not necessarily a bad thing. Who knows? The important thing from a regulator point of view is absolute transparency on what's going on, and that the mechanisms for investor protection are efficient. Yeah. The rest is up to the issuer and the market.
Correct, true. And well, it was really a fascinating conversation with you on global developments, also on local developments. I think perhaps, again, is in the interest of time, I will just say, if you would like to say any sort of last words about developments that investors or others should be, who are following the local market, should keep their eye on. I'll leave you perhaps a minute or two to give any, if you have any concluding thoughts, particularly as they relate to the world of governance and regulation, and perhaps we'll close it there.
Absolutely, thank you very much. Well, one of the comments that I find important here is that we are conducting in Brazil, just in this year, or maybe a little more, a deep restructuring of some key aspects of governance and capital markets framework here. We are in the final stages of a public consultation that relates to the whole set of rules of public offerings, and we expect to issue sometime this year, maybe early, but sometime this year, later, a new matrix regulation for public offerings. So this is new. This is something that will come soon, and we have concluded the public consultation phase, and we'll start reviewing the contributions from the market on our process for modernizing the disclosure rules here, the disclosure statements that the companies keep within our system and the stock exchange system. And that's where we are aiming in two directions. One, simplifying the information, reducing the cost of compliance, and simply eliminating redundancies and unnecessary information, and making the information easier for the investors of all profiles to understand. And the second part is incorporating ESG content in our in the statements that the companies keep here in the disclosures. We are adopting the comply or explain approach. We find it very important that that markets, that investors can look at Brazilian issuers and know how they go about ESG topics, which are key to maintaining competitiveness of our markets here in Brazil. We think it's an important step ahead. We know that this obviously creates some more obligations for the companies, but on the one hand, we are simplifying and cutting back on a number of other areas. And number two, if we don't move in this direction, we will lose appeal to other markets that are doing consistent developments in that area. So those are a few of the developments, the regulatory developments we are conducting here in a market that is in transformation, with a growing number of individual investors, with serious adoption of technology. By the way, I didn't mention, but we are about to conclude the first cohort of the Brazilian regulatory sandbox. We are going to announce the first cohort, the companies that have been selected in the early and the second semester of this year. So it's an exciting time to follow up the markets here, and we are very happy to be able to conduct these changes.
Thank you so much for sharing your initiatives, and indeed the scope of work you just described is enormous. And what's interesting is, well, first that we started with ESG, and in a way we are ending our conversation with ESG, but also from I suppose from the perspective of our audience and others who really follow the corporate governance space closely, some of the nuances you're mentioning in terms of trade-offs between, certain disclosure obligations and increase in others, and that constant sort of balancing act that regulators play, and that is needed for development of markets. I find it personally fascinating, though, and probably gives me more incentives to look at your market and more closely, because it's not a country that I've historically worked with. So I'd like to thank you so much, first of all, for making the time to join us. And I do hope to continue this conversation with you on future occasions.
It will be a pleasure. Thank you very much for this opportunity. It's always good to have a good dialogue on the work we're doing, and be happy to do it again.
Thank you. And for our audience, I just would like to highlight that this episode, of course, will be available on our YouTube channel, and as will be other dialogues with regulators and board members. And I do hope to have also further opportunity to talk about different regions, including Latin America, Middle East, Asia, and we'll be exploring these regional dimensions and further dialogues specifically on governance. So thank you for joining us today.